Thank you very much, Jote. Good afternoon, everyone. Thank you, and welcome to this very important conversation on financial inclusion and deepening, progress so far and priorities ahead. We're meeting and reflecting together at a time of significant progress. As presented, Ethiopia's second national financial inclusion strategy, now in its final year, has really achieved impressive gains. We've seen access points grown nearly 8-fold, digital financial accounts going from 34 million accounts to over 200 million, transaction volumes nearly quadrupled, and really a huge surge in interest-free banking, deposits, and account usage. But the theme of this morning, as I've been hearing everyone, is that there remains work ahead. And MSME and agricultural lending, insurance and microfinance coverage are still low, and entire groups, including women, smallholder farmers, remote communities, remain underserved and potentially even underrepresented in this audience. So the question now before us, and what I will delve in with the panel, is it's not whether progress is possible, but how can we go farther, faster, and more equitable? So I'm thrilled to be joined with this remarkable panel of leaders, both national and global leaders, who will bring deep expertise in expanding financial access and innovation. We have with us Mary Porter-Peshka, Regional Director for Eastern Africa at the IFC, Michael Schlein, President and CEO of Accion, Abie, Director of Digital Financial Services at FSD Ethiopia, and Abie Sano, President and CEO of the CBE, the largest bank in the country and the key and most significant player in digital and inclusive banking. I want to start my question with Abie. I think in our region, large banks can be seen sometimes as being slow movers in inclusion efforts, but you hold the greatest potential to change the game. And CBE has been a good example of that in the last number of years. You've got thousands of branch networks, more than 30 million wallet subscribers, and you as one bank hold over 75% of all digital transactions in the country. My question to you is really, how do you plan to capitalize on these footprints, and how do you intend to continue expanding your services to this underserved, especially in the region of accessing additional services as well as credit?
Okay, thank you very much. In fact, much of my job was done by previous presenters. They have well explained my challenge. The question is really very tough. Accessibility, financial inclusion should have been the priority of CBE, but unfortunately, since over 90% of our assets were locked into empowering the country, actually, we just invested in power. But that has taken every money that we should have done a lot down there. For many years, we have been thinking that access to financial services is like opening bank branches, coming closer to them. Facilitating to have bank accounts was enough, but financing was never been taught other than financing public projects and a few business entities. So access to finance was something I should rather accept. Didn't do enough. We have to do a lot. But recently we have done several things, though it looks very small in view of the CBE size and our colleagues, even in East Africa. We didn't do much enough because of the historical background earlier mentioned. Recently, several times the issue of Telebir is mentioned. CBE is a financer. We are the one who provides the finance. Tele only gives the channel, but what is being talked is about Telebir rather than the banks behind them. We have financed over 782,000 customers, which is only this one 8.8 billion. CBE have piloted its own digital finance, and so far we have financed over 24,000 borrowers with over 2.3 billion. This gives me a big hope that we can go a lot, but CBE is expected to finance in millions, not thousands. But to the shame of us, before 3 years, we had around 140,000 borrowers in personal loans, mainly of condos finance, and barely a little over 10,000 for finance, commercial finance. So compared to that, these numbers are very big. Recently, we have launched a digital finance with a fintech for farmers. We have onboarded about 927,000, nearly 1 million farmers in Oromia, and we have dispersed for fertilizer finance about 14 billion. This gives us big hope. This is a kind of pilot we can launch to all other regions, so we can reach the society. For condos financing, CB financed about 349,000 housing. This costed over 112 billion in terms of money. But regard to MSMEs, our finance was limited to only about 9,000 borrowers, which we need to scale up, and it took about 23 billion this year, but it has big potential to go forward. Women are mainly on savings. We need to work much on the financing side. We have about 8 million savers. The women's only about 145 billion. Women's are very good savers. So this is a product we have specially launched for women's only. It bears a little higher interest, gives some support on their shoppings. So that's why they were attracted to it. So we need to work on the financing side. For the years only, we have about 302,000 teens saving about 2 billion even on this segment. Interest-free banking was another thing that has been considered as part of inclusion, because before 10 years, there is no such product, no access to finance, no access to even savings, because they fear that their money goes to the wrong end, so they don't save and they put money at their home. Now we have close to 7.1 million savers, saving about 180 billion. So we have lent the interest-free banking segment over 71 billion in loans. So yes, as you have said, banks are very slow. Big banks particularly very slow, because they feel about the risk. Risk as everything that we put at front of us, but in my view, the risky customers are the big ones than the small ones. Mohammed Yunus done a lot of things around that. He has shown the global microfinance institutions that going down to the society is not harmful. Everybody is entrepreneur according to him, even the beggars. He converted the beggars to the borrowers. So our bankers should consider going down to the society, and everybody that can work can lend. So far we didn't do enough, because every budget we have should go to the public. As many officials has been presenting earlier, CBE has been serving as public treasury. We can say we were quasi-public treasuries than the commercial bank. We have been collecting saving from the public, but lending to a few public enterprises. But now we are unlocked from that shackle. Just 2 years ago, our private portfolio is barely over 72 billion. Now it is approaching 400 billion. You can imagine how many fold. 5 times it has grown in only less than 3 years. So it has big potential as the government finance that used to finance the public infrastructure is now being repaid for CBE. Our journey is now to focus mainly on the private portfolio, mainly using the digital finance. We will further go on fintechs, collaboration, and Ethio Telecom that we have already started. We can use our own CBE platform and provide, particularly we have already launched it for salaried employees, which we would go further. We are partnering with MasterCard, UNDP, and DBE to finance, particularly the YAS and the startup finances, which we focus more on. For the whole public, we will open up mortgage, automobile, and personal finance that reaches every home for financing. And for farmers particularly, we have focused product that we have developed to finance irrigation pipes, solar and biofuel financing, and of course, what we have been used to do on agricultural implements financing. The digital financing for women is also something that we are launching. So this will really help us to deepen our physical as well as digital access to our customers. Our branches, we are reducing our branches in the big cities, but we are going to expand in the areas where we didn't reach. Still, there are over 270 waradas where there are no bank branches. So we have to reach all the waradas, but we reduce our number of branches in the city. So we'll work on all physical access as well as on the digital finance. Leveraging our most liked mobile banking channel, we will also going to provide financing through this channel. Earlier, we have been thinking only on our wallet, but now people are liking our mobile banking. So why not we provide financing through this product? So this is what we are working on. Enhancing the financial knowledge or strengthening the financing literacy is really very key so that all the things will be successful. Anyway, for your question, long way to go, but we are working on all rounds to cover up for the losses. Thank you.
Thank you so much, Abie. Clearly, a lot done in the past couple of years, and a lot of potential that we expect from the national giant like CBE. Moving from this vantage point of CBE, let's now maybe shift to the broader ecosystem of capital and investment for greater financial inclusion. I'll come to you, Mary. IFC has played a catalytic role in unlocking private investment in financial systems across Africa. In Ethiopia's case, where the financial sector, as we've heard, has had some notable reforms, what strategies should be prioritized to crowd in this private capital that can advance financial inclusion and can support some of the efforts that our banks are doing here in country?
Thanks. So, we're very much with NBE. We see immense potential to leverage private capital to advance financial inclusion, but the key, we think, to unlocking that potential is really to have very focused strategies focused on addressing the barriers and strategies focused on leveraging innovative solutions. So IFC is working in a number of areas with partners on the ground here in Ethiopia. First, we're working to expand credit access. As you all know, limited credit history is a real impediment to MSMEs and individuals gaining access to capital. So we think by leveraging alternative data, things like utilities, mobile, trade credit or information, we can really unlock that access. And so IFC's been working with NBE to modernize the credit registry and enable financial institutions to use alternative data in their credit assessments. Second, we're helping to enable movable asset lending. Most SME assets are composed of movable assets, things like equipment used for production, inventory for sale, the vehicles they use for transportation. By allowing movable assets to be used as collateral for loans, it enables businesses to access credit without things like land or buildings, immovable assets. So IFC's partnered with MBE again here to ratify the Movable Property Security Right Proclamation, and we're strengthening the ecosystem by piloting movable asset-based lending. Third area that we're in is developing a warehouse receipt system. Here, we've worked closely with the government to implement the warehouse receipt system and collateralized commodity finance. This allows producers to store their goods, to sell later at higher prices, and to access finance, while financiers can lend against this secure, regulated collateral. And then lastly, it's about leveraging digital technologies. We know digital technologies can lower inclusion and drive growth. So IFC's been helping various Ethiopian financial institutions to enhance their SME services through digitization and product development, channels, and credit risk assessment. So right now, those are the four main areas we've really been trying to push the needle in partnership with our Ethiopian colleagues.
Thank you so much. I think what I'm hearing is that investment flows when the conditions are right, and we're investing in the right innovation that attracts that investment. I think this is a good segue to Michael, who, as Accion CEO, you've seen financial inclusion journeys across dozens of emerging markets. My question to you would be, really, if I can put you on the spot, if Ethiopia hopes to avoid common pitfalls that you see across the emerging markets that you work in and leapfrog progress, what unconventional lessons, perhaps the ones that we don't usually hear, would you like to share if we are to achieve financial inclusion to those that are most underserved?
So thank you, and I'm honored to be here, and this is a fantastic conference. And let me just say for a second, so Accion is a global nonprofit dedicated to creating a financially inclusive world, and we started in 1961, and we are a very active early stage investor in fintechs and banks trying to reach the people who are left out. We're also, we have a whole advisory arm that works to help digitally transform banks and institutions. And we have a think tank, and my colleague Eduardo Tortola will be on a panel later on today, and we'll share some research that we've done. Over our history, we've helped to build 267 financial service providers in 75 countries that today are reaching hundreds of millions of people. There's a moment, just taking a step back, that global view, over the last several decades, we've seen enormous progress in reducing global poverty. Until today, for the first time in the last several decades, we are as a world, we are no longer making progress in reducing poverty. It started in the pandemic, but it's more complicated than that, and progress has really flatlined. And yet at the same time, and you're hearing it through this whole conference, there is this digital revolution, there's so much new innovation, and so we collectively as a movement for financial inclusion have to seize this moment and redouble our efforts. And there are many, many lessons to learn from countries all around the world. For a country like Ethiopia that has such an amazing, clear strategy, the central bank governor, the president, the finance minister, all outlined such a vision, and it is being implemented very, very well. I'll give you, but one theme to focus on is we talk about the digitization, and that can be dispersing loans and collecting loans, but I think, and Mary touched on this, a lot of it is alternative data sources and finding new ways of using data that have never been used before in making loans. I think we have better data today than we've ever had before, and therefore we can lend better. I'll give you just one example. There's a company in Kenya and now is in 20 countries across the continent called Pula. And Pula is using global satellite data. And just in the last few years, global satellite data has gotten really high quality and really cheap. And so Pula is using that. And for the first time, they can, with satellite data, see when there's a drought, when there's a flood. They can monitor soil condition. They can monitor cloud coverage. And they can provide agronomic advice. And all of that, why is that important? Well, first of all, for the first time, we can insure smallholder farmers in remote locations. And most importantly, especially when you're dealing with people that have never had access to financial services before, alternative data sources are allowing us to see people who have been invisible. So it's especially important in this effort to create financial inclusion. Another example is we're seeing a big revolution around digital public infrastructure led by governments. What's happening in India, what's happening in Brazil is remarkable. 40, 50 other countries are also following and investing in real-time payments, universal biometric IDs, open banking. Much of what you're doing here in Ethiopia is very much builds towards digital public infrastructure. But I would say there's also a little bit of a unconventional lesson. When they first said they were going to roll out universal biometric IDs in India, people thought they were crazy. 1.4 billion people, I remember the moment, and then they did it. And the key thing there is once they did that, anything was possible. If you can really bring digital biometric IDs to 1.4 billion people in India, then anything becomes possible. So I think a lesson, and I think it's happening here, which part of my excitement is, if you have ambitious goals and you're executing them well, you're building trust and confidence, and then a lot of other things. People say, oh, wow, I can do this. The last thing I want to share is just some research that maybe Eduardo will get into greater detail, but it's very important because it's all about the power of these tools. We just did some research of 20,000 micro and small enterprises across 5 cities, including Addis, but also including Sao Paulo and Lagos and Delhi and Jakarta. And here's the good news. The good news is for each digital tool that a micro or small business adopts, they were up to 10% more likely to see an increase in revenues, and they were also likely to see an increase in productivity. So this is working. The digitization and these digital tools, that's the good news. The bad news is we're early days, and we're particularly in early days here in Addis. And that is due to poor internet connectivity and lack of other tools. So the opportunity is enormous, but we're in the early days of reaching it. So catalyzing that. And again, conferences like this and seizing this moment are critical.
Power set of global lessons, thank you. But also a message that Ethiopia has taken the first steps, and we're speeding towards getting that done, the way other geographies have done it. Digital tools, interestingly, Abel, my question to you was going to be looking at your expertise in the sector and all the work that you've done both with digital and traditional finance, and also with the work that you do now with FSD Ethiopia. How do you see digital platforms and the opportunities that innovations in that ecosystem can bring in accelerating inclusion? Michael was just telling us their study tells us it's early days in Ethiopia. But what, from your point of view, where are the opportunities, and also what barriers need to be addressed to unlock these tools at scale?
Thank you, Hayat. I think that's a great question. I think it also goes back to what was being presented earlier by Jyoti work. If you quickly see the journey we had in the past 10 years, quickly see, say, fintech companies that introduced a lot of innovation in the digital finance space. Say, if we pick Kifiya, for example, they have introduced a lot of innovation around, say, index-based insurance, branchless banking, payments space as well, over-the-counter payments. If you look at HelloCash, for example, they introduced the agents banking model in the eastern part of the country, where they created a lot of opportunity for a lot of people. I can also mention the experience of Ember that digitized the government-to-people payments, such as PSNP in the earlier days, that created a lot of new accounts, as well as digital liquidity. Hence, the opportunity they created in terms of inclusion was immense. But then these kind of innovations were not able to achieve scale and, of course, reach the multitudes. But if you follow the whole trajectory, they were able to expand the market and then create new spaces for financial products and services. If you look at then the change that was introduced by NB in terms of introducing the new directives around the PII, payment instrument issuers, payment system operators, opening of the banking space foreign players that allowed Telebur to come in, for example, or M-Pesa as well, has shown digital financial services can actually expand the whole thing. Telebur, for example, has managed to open accounts more than 50 million plus or so. Same with M-Pesa, a lot of significant achievements there as well. So if you see the ability of digital finance in terms of creating new markets, expanding the whole space, creating opportunity for everyone, also lowering the cost of operation is significant there. If you look at the numbers of the Findex numbers that were being presented earlier, from 2014, 10 years back, around 14% to 35% now, 46 by 2022, and then the analysis we did with BCG also estimates right now we have achieved somewhere in the region of 60-65% financial inclusion. So you could see innovation in digital finance has actually created a lot of opportunity in the space without taking away other efforts in the space, of course. But again, a key thing is in terms of creating scale and then being able to reach everyone. So far, I think the struggle has been in terms of the supply side coming up with the right use cases that will address not only the urban population, but also rural communities that actually need these services. And then maybe if you look at it from the demand side, some challenge and the barriers could be in terms of literacy and in KYC. That's why right now we're trying to look into, of course, in partnership with NB, trying to see innovative opportunities. Say, earlier the example of Pula was mentioned. We're right now working with Pula, for example, to embed insurance, in the same insurance to more than 7 billion farmers, creating an agent network where sustainability has been challenged so far, but being innovative and in bundling a basket of products, even including non-financial products to sustain agents so that these products could be expanded to rural level. Earlier, one of the challenges mentioned by the presentation was the divide between the genders in terms of adopting digital finance. One of the gaps that has been observed is the gap between the two is expanding. So we think this kind of innovations through expanding, being creative around agent networks can actually help reduce this gap. So you could see digital finance and innovation has actually created a lot of opportunity in the space. Thank you.
Thank you so much, Abel. I want to go back to Abie. You talked a bit about some of the partnerships that you've launched, and CBE, I understand, has always anchored financial inclusion in your strategy. And you've been telling us that the last 2 years you've been able to catch up now that the macro situation has been changing. My question is to you personally in terms of what advice you would give to other banks and other CEOs who may need to be doing this shift themselves to see sort of inclusion rather than a mandate as a business opportunity as you're doing now. Can you tell us a little bit about what you think it takes to hardwire that mindset into the banking culture in Ethiopia?
Thank you very much. Yeah, there is a lot of things that we need to do. In the old days, I remember we used to limit the number of customers that want to open bank accounts because it was difficult to operationally serve them. And later, there was also a limit for minimum amount of lending because it was operationally expensive to lend small loans. But that time has gone. Now technology has come. So we need to have a different mindset where we will be able to access everyone that has a need. So we have to revisit our lending strategy. Our old lending strategies and banking service strategies would not work for such kind of environment. The other thing is we need to have a tailored products to the situation. We cannot use our conventional lending practices with the same criteria, the same eligibility requirements, asking for collaterals. We cannot lend. We need to find the mechanism to serve the society. Of course, we have to promote literacy as well. Even though banks want to finance, and most of our society thinks that banks are not for the poor. They consider that only those who have big properties, who have big businesses can come to the bank. Even small businesses do not dare to come to the bank. They don't think that their businesses can be financed by the banks. So we have to educate, of course, how to manage their businesses and how to access the banks as well. So educating and, of course, our banks' systems and organizations and how they do business should think about how to educate their customers. We used to train our employees, but banks don't mostly go to the customers and educate. There are personal relationships where individually we go to each customers and talk to the customer, discuss about their businesses, but there is no well-organized and functioning customer literacy program from the bank side. So to align with the time, without technology, for instance, customers defrauded by the technologies on the other side. So we have to educate our society so that they would mitigate the risks that is coming to them. Leveraging the technology is very critical. CBE is thinking on this line, particularly for small borrowers, for the micros and MSMEs. We are going to launch digital finance. We cannot do it using our conventional services, and we should also empower our branches. In the old days, our branches used to have the mandate to lend. But sometimes, because of the non-performing loans increased, loans somehow centralized. But now we are going back to the origin. Now, unless we empower our branch and to do at least some small loans to the societies around them, we cannot access all the societies easily from the center because it is costly for the customer to come to the centers or even to our districts. So empowering our local branches is also another thing that we need to see. We need to engage the community. The risk of default is also something that we are fearing. So engaging the community and the local government is very important. Banks should be protected. Banks should be encouraged so that they take more risk and serve the society down there. So it requires all parties' concerted effort. The banks alone cannot do everything. When the banks go down there, take more risks, the society should also support them on the recovering the loan. The society should discourage default, and those who intentionally borrow and default should not get space in the society. So we should educate the society. We should engage the society for that purpose as well. So the leadership is critical on all these, all the things. Otherwise, it cannot happen. So by doing all this, I feel lending can be democratized. As the governor has reported a year ago, and he was saying majority of the loan were given to very few borrowers. This is embarrassing to the financial players, and this has also exposed banks to excessive risks because we used to overfinance few borrowers. Every bank see their own side, do not consider what other bank did to the same customer. So we have to expand this base to the whole society. Everybody has the right. For the banks as well, is also about diluting the risk by distributing the risk to the society and also ensuring growth at every corner, at every society. So I recommend to my sisters and brothers in the financial sector to revisit their strategies. Thank you.
Thank you so much. This brings me nicely actually to you, Mary, because Abie was talking about needing to de-risk. And IFC has a number of blended finance, sort of solutions around the region. Can you tell us a little bit about what partnership models or potentially blended finance models you've utilized in effectively reducing this risks that banks do face when they move towards lending to sectors that they haven't previously done so? And how can this be adapted to Ethiopian context?
So I have a very long list, but in the interest of time, maybe I'll just touch on two. So first off, many of the markets IFC's operating in are facing foreign exchange shortages, and we've found that local currency financing is one way to really help contend with that. So back in 2018, we signed with NBE a local currency framework agreement that allows us to offer local currency loans supported by blended finance in the country. And as of April 2025, we've provided up to $85 million in local currency financing equivalent. And this financing has gone to support our partners like Shemu Oil, Ethio Chicken, Infinity Medical, so they can expand their operations, create jobs, strengthen food security. Another area worth talking about is risk-sharing facilities. This is a tool we use so that we can reduce lending risks in areas such as agriculture, the SME sector, and thereby encourage financial institutions to participate. So by offering partial credit guarantees or first loss capital, the facilities lower risk exposure and help improve and expand access to finance.
Thank you very much. And I think in the interest of time, I'm going to pose the same question to Abie and then to Michael to close us out. If you could change just one thing in the next 12 months to accelerate financial inclusion in Ethiopia, what would it be? We've seen the numbers, and we've talked about needing to get there faster. What would you change?
I think we are at a great spot right now, where a lot of the things are aligning. One thing I would change would be to take advantage of the earlier point Mike was raising in DPI. Now we have the critical elements in ID. We have interoperability in digital payments space as well. What I'd see to build on this would be to create a consent-based data sharing mechanism that would allow proliferation of all sorts of products and services in the financial space, hence driving the financial inclusion numbers higher and higher. This will also create, I think, a very good space for what Abie was also mentioning earlier, access to finance. The ability to share data, be able to score and provide access to finance for the informal sector could be a big driver of a next phase of our financial inclusion, I think. Earlier this month at FSD, we did kind of analysis around this. We also took a benchmarking exercise in few countries, including India. One of the major things we saw was the ability to use access to finance as a major driver of financial inclusion as opposed to just a transaction account. I think with that, we'll be able to leapfrog to the next phase. And hopefully, I hope in the next round of the financial inclusion strategy, we'll make access to finance the basic driver of inclusion as opposed to basic transaction accounts. Thank you.
It's a great question, and I guess I think we're talking about innovation, and innovation from a regulatory perspective is actually quite a challenge. Inevitably, regulators have a hard time keeping up with innovation. So if you ask me for one thing, I would say that openness to embracing new ways of doing things, and you have to do it carefully and responsibly. And especially in the world of financial inclusion, you have to do it with great empathy. But I'll give you an example. And I do think we have to worry about some of the basics, like fraud. And in this new world with generative AI, I think we're going to see rapid expansion of fraud. And yet there's a flip side to it, which is harnessing that innovation in a regulatory sense. In the Philippines, they're using generative AI to respond to consumer complaints. So it used to be you would send in a letter, if you were the victim of fraud, you'd send something in and you may or may not ever hear back from the regulator. Now in the Philippines, you're hearing back in real time. And that's not only responsive, but that's a tool for the regulator where all of a sudden you can see fraud happening in real time. So that openness to technology, but also balancing it, I think is probably what I would wish for.
Thank you so much. Thank you all for your thoughtful, grounded in experience perspectives, but very inspiring, I think, confirming that Ethiopia is on the right track, but we've got some ways to go. In order to sort of just to close out, I think what I'm seeing is that the NBE, the Ethiopian National Financial Inclusion Strategy, which will be renewed, will give us the vision. But I'm hearing today from all of you that the delivery will actually require partnership, alignment, and really smart partnerships that can drive and leverage this momentous moment Ethiopia is in. And dare I say, we will all need courage to help us see that through. I hope for everyone here, today's panel discussion and the reflections has given us collective insights on what we can do next and what collective action and partnerships we can all build on to deliver on the new targets. Thank you so much. Thank you, everyone.